Hello everyone. Today we'll be analyzing Bitcoin again, and at the moment everything is going according to plan. This plan was outlined in the previous review, and it was for growth to the area of $66,000. Right now Bitcoin is trading at 66,600, and today we'll figure out what to expect next. But before we move on to the chart, we'll talk about some fundamental events. The main factor currently associated with Bitcoin's growth is of course the deal or agreement between the US and Iran. In other words, geopolitics. For traditional markets, another reassurance from Trump immediately triggered risk appetite mode. Oil went down, the stock market bounced up from last week's low, and yields and rate expectations also started to shift from previous levels. This is also important for Bitcoin because right now it's not trading as an isolated asset but as part of the overall risk appetite. When markets are afraid of war, expensive oil, inflation, and a strict Federal Reserve policy, it becomes very difficult for Bitcoin. When this tension eases, buyers start to return, including to the crypto market. It's worth noting one very important point. Even before the agreement between Iran and the US, which became known last night, I made a review on YouTube where I pointed out the rise of Bitcoin to around $66,000. In the end, that's exactly what happened. But what's interesting is that I knew absolutely nothing about these agreements, and no one else did either. This once again points to the fact that the market doesn't move based on news, but rather on the technical picture on the chart. In other words, the market was already prepared for this growth, and Trump, with his news about the agreement with Iran, essentially acted as a catalyst. It didn't create this movement from scratch, but rather initiated its start and gave this movement additional momentum. And if we return to the fundamental factors, we should also mention the Bitcoin ETF. After several weeks of pressure and outflows from spot ETFs, we finally saw a positive signal. On Friday, the funds recorded an inflow of about $86 million. Of course, this is not a huge amount compared to previous outflows, but psychologically it is important, because in recent weeks the market logic was roughly as follows. Institutions are withdrawing money, demand is weakening, which means nothing good can be expected. Now, the situation hasn't changed dramatically, but it has become somewhat softer. It hasn't been completely broken, but an inflow of a mere $86 million can only be seen as the first attempt at stabilization. It's also worth mentioning the Federal Reserve separately. This week we are expecting a Federal Reserve meeting. It will take place on June 16th and 17th, and all of us, traders and investors, are waiting for it because it is during these days that the decision on the interest rate will be made. Most likely the rate itself will remain unchanged. Therefore, the decision on the rate itself is not that important. It is in principle predictable. What is much more important is the rhetoric and the explanations that will be given regarding this decision. That is, if the Fed makes it clear that inflation risks are still high and that a rate hike is quite a likely event and the Fed is considering such a scenario, then this could very quickly dampen any appetite for risk. If, on the other hand, the Fed shows that a rate hike is not in its immediate plans and is not even being considered, then Bitcoin will have an additional chance to consolidate above its current levels. But all of this concerns only the fundamental factors of the market. Now, let's move right along to the actual price chart and perform some detailed technical analysis, which, in point of fact, is significantly more important than any sensational news you might find in the mainstream media. And before we get directly into the analysis, let me remind you that both my analytics and trading, at least my own, I do on the QuantFury platform. Here, you don't pay any commissions at all, and you can trade not only cryptocurrencies, but also stock market shares, stock market indices, many other indices, ETFs, and commodities. And all of this is commission-free, and all of it is at spot prices. These are the monthly candles of Bitcoin. This is the exact chart I was looking at yesterday in my Telegram channel. And I see two potential growth scenarios. Why potential? Because Bitcoin has broken down through this white line of the global uptrend, which means by formal criteria, it is in a downtrend. Moreover, we saw 1, 2, 3, 4, 5 months of continuous decline, which has ultimately stopped for now. Let me clear all the markings at the 50-month moving average, and we have already broken through this average. This means we face the risk of a deeper drop to the 40,000 area where the 100-month moving average lies. I'll bring the markings back. And now, two growth scenarios. The first scenario is the blue one. In my opinion, it's less likely, but nevertheless, it's a scenario where we test this upward trend line and then subsequently move down to the 100-month average. The second scenario, the yellow one, is testing the June highs, where the sellers' stop orders are located. And if after that the price continues to go down, then again the target is $40,000. But if the growth engulfs the February candle, which set the minimum for 2026 at $60,000, and in June it was updated to $59,130, then in this case the blue scenario is activated, with growth towards the area of 110 to 115,000. But for now, looking at the chart, we can see that the May candle, after updating February's highs, closed with a red body, which indicates that the sellers were stronger, and the June candle, right here and now, is engulfing April's green candle. And if June closes like this, then with a high probability we will continue to move further down. Also, without going into details, I want to say the following. According to my analysis, the stock market, specifically the S&P 500 index, has, let's say, growth potential over the next 2 to 4 weeks, including the current one. Today is Monday, June 15th. Following the conclusion of that period, I fully anticipate that we will see either a significant worldwide economic downturn in the stock market or, at the very least, some kind of substantial and profound market correction. And by deep, I don't mean 10%, but at least 15 to 20% or maybe even more. So based on these, as long as the stock market is rising, and as I already said, I think it will keep moving up for another 2 to 4 weeks, Bitcoin has a window of opportunity, which means Bitcoin could go even higher. And to understand what growth prospects Bitcoin has, let's switch to the weekly candles. On the weekly candles, there's no need to make any complicated plans. We can see that the close of the week before last was the lowest since around September or October of 2024, and this suggests a continued decline, for example, toward the 300-week moving average in the area of $55,000. But it's not forbidden for Bitcoin to rise, first of all, to the middle of this candle, which is $68,000, and we're close to that value. And secondly, it's not even forbidden to reach the base of the candle from that big drop on June 1st. That is somewhere around $74,000. And in fact, this is where the decision point will be. If Bitcoin manages to engulf this candle with growth, not necessarily with a single candle, but with several, then the path opens up, first of all, to here, around 82,000, and secondly, for testing the moving averages, the 100-week red and the 50-week green. That's let's say $80,000 and also $90,000. Although by the time we reach these levels of 82,000, if we even get there, by then the 50-week moving average might have dropped somewhere around here. We might test it and then continue further down. But for now, we're talking about just one thing, either a rise to 68,000 or the base of the big red candle at 74,000. That's it. Until that is formally absorbed on the weekly candles, Bitcoin continues to look downward. Don't be charmed by Trump or his deal with Iran. Trump's words and his deals change much more often than the direction of the wind in an open field. Now let's switch to the daily candles and we'll wrap up our review on that note. I'll just remind you that we're doing this on the Quant Fury platform, where you can trade commission-free with several thousand financial instruments. I can't say exactly how many there are, but it's really thousands. Stocks, cryptocurrencies, ETFs, commodities, indices, and much more. The Forex market in particular. On the daily candles, we can see quite an interesting picture. I've removed all the previous markings that we had in earlier reviews. We'll start from scratch. Well, first of all, we had a pretty important close right here when we went up to $60,000. I'll remove the markings from the monthly candles and redo them again. That was $62,909. You can see that we dropped below this level, but now we've consolidated above it. That's a positive sign. This positive momentum extends all the way up to the level of this green candle, right? Because that was the upper boundary of the flat range at one point. Here we broke through it, tested it from above, and then continued moving upward. Accordingly, right now the formal magnet for us is the $70,500 level in terms of daily candles. What other positive signs do we see? There was a big drop candle on June 5th. That was the Friday before last. Not last week, but the week before last. That candle was absorbed on June 13th. Well, that was on Saturday. On Sunday, the growth continued, and now on Monday, it is still ongoing. Accordingly, the target of this growth was the base of this candle from June 3rd. We have reached it, and the next technical target is the base of this candle from June 2nd. That's about $71,500. And as we just discussed with the weekly candles, $72,000 is acceptable and does not break the downtrend. Therefore, here and now, I wouldn't consider any short positions on Bitcoin. If you want to buy with a target of $71,500 or $72,000, it's better to wait for a correction. Where could this correction go? Well, it's hard for me to say right now. Well, for example, to the base of today's candle, which is $65,700, or maybe even somewhere into the middle of yesterday's candle, because there's a large untraded zone here around the $65,000 area. You need to understand one very important thing. Jumping onto a rocket that's already taken off and climbed quite high is, well, risky, yes. That is, yes, the chances for Bitcoin to grow are quite high here and now. I wouldn't talk about any selling, but you should at least buy on corrections. But if you're in a hurry, well, buy now. Well, as they say, God help you. That concludes our review. Let me remind you that we did it on the Quant Fury platform. 0 commissions, my recommendation. Subscribe to the channel and leave your comments. See you next time. Goodbye.